YouTube to switch over, and it is being live streamed and recorded. All right, let's get this thing going. Lots to talk about today. Okay, perfect. Let me just share my screen. And here we go. Hope everybody's doing well today. Good morning. Let me put here good morning. Good morning, everyone. Hope everybody is doing well. And again, hey, Infinitely, good morning. Ivano, good morning. Don't forget to join me live today, folks, at 1 p.m. I'm going to be giving you my top 5 stocks that are hot right now at 1 p.m. So it's going to be real live stuff. It's going to be real good. It's not going to be 5 stocks that may go up. It's going to be 5 stocks that are moving. I just posted the link. Rick, good morning. Awesome, good morning. Tenright, good morning. Henry, excuse me. Henry, good morning. Hope everybody's doing well. I'll give the room just a few more minutes to fill up a little bit early today. But I got a lot to talk about. There's a lot of things going on with the market, and we need to discuss each and every one of them. Yeah, early start with my wife at home. Yeah. Sometimes I sleep in, sometimes I don't. I'm trying to sleep in a little more, so I do these a little later than usual. But here we are, a little later than I guess folks like me to do these a little later. But anyways, I'll get started. If anybody's coming in, remember you can always watch these videos live in real time as it's happening and as it's dropping. But I wanted to get here earlier today because there's a lot to talk about. If you guys could see my screen just fine. Good morning, Ed. Please let me know. I want to make sure that my screen is visible to you all. And if you're having any kind of visibility issues, you can go to the gearbox on the YouTube and increase the HD to 1080p. I'm broadcasting this in 1080p. So your screen should be not perfectly clear, but it should be clear enough. All right. So uh, the Nasdaq is starting out with a bang. We're pre-open. We're up about 80 points. Good, Gary. Thank you. Good. Good morning, Thomas. Good morning. So the Dow's up only 44. It's not easy for the Dow to get started. There's no major catalyst for the Dow this morning. And also, folks, just want to remind everybody that the market is typically subdued when we have an employment report. So we do have a lot of data today. We have international trades in goods and services. We have jobless claims. We have productivity costs. But generally speaking, and you have Powell speaking. So we may see some volatility here, but honestly, usually, most of the time, hey, Mohammed, most of the time, what you will see is you will see the market subdued in anticipation of the employment report because large funds don't want to make big bets ahead of this report. So yesterday was a pretty, you guys might have seen yesterday in the trading pit and so forth. I was a pretty busy beaver. But today, we may be a little slow because the market may be a little slower than usual. As far as earnings, we've got some big dogs. You got to keep an eye on semiconductors today. You've got AVGO, you've got Marvell, you've also got Costco. That's a pretty big retail stock. That has about as much impact as Target. So you got to keep an eye. You got to keep an eye on all of these stocks because they could impact the market. Aside from that, we've also let me just see here. We've also seen, if I remember correctly, we've also seen an upgrade in Micron. So not only do you have 2 big chip stocks reporting, but you also have Micron up 3% pre-open. So don't be surprised if you see some volatility in chips today once again. Also, you've got Kroger, Costco, as I mentioned before, MongoDB, Burlington stores. My parents go there all the time. I don't know why. wholesale, BJ's you got today. But you could see that smaller stocks are starting to come out with earnings. You don't Smith and Wesson too, by the way, but you don't have as big of a stocks. This is the last big hooray. So DocuSign is coming out, Toros coming out, but the big ones, American Eagle's coming out, but the big ones is Broadcom, Costco, Marvell, and Kroger. Those are the big, big, big. Hey, Jack, how are you? Good to see you. Good to see you. I was corresponding with you yesterday uh, via email. By the way, coin is up again this morning. For all of you who are coin who like to watch coin, coin is up again this morning, and it looks like it wants to go higher. It's actually up pre-open about 2%, Jack, about 243. So if anybody did not get out for whatever reason out of coin, you guys should have plenty of opportunity to get out right now with a profit. What happened that time? What happened 2 days ago when I explained it to Jack, but I'll explain it here. I gave you guys a coin trade, and pre-open coin was up like this. It was up 3%. And then magically, it usually doesn't happen that way. It just would open flat. Usually the pre-open translates right into the opening, like 99 out of 100 times. For some reason, coin just opened up flat, but then half hour later, it rallied back to our price. So anybody who relied on my order would have gotten filled like right where we at flat, but then half an hour later, it went back to our price and went down. Anyhow, for whatever reason, the stock is doing fantastic right now. So you guys can you have plenty of opportunity to take advantage of it. Bond market. Remember, I drew this yesterday and it went right up to that level and it stopped. I think the bond market is going to be coming back down into the range. I don't think the Fed is going to. I mean, yes, Fed rates are going lower, but again, they're starting to have they're starting to become a little more guarded in terms of giving us. If you remember. 6 weeks ago or so, it was very much, good morning, Timothy. It was very much, we're at the peak. They're going lower, 3 or 4 rate hikes, probably in March or May. They were going hard and heavy. Thank you, Jack. They were going hard and heavy. But I'm glad, Adam. Good morning, Adam. But seriously, in all honesty, it's a little overdone. It's a little overdone. I think the Fed is now going to start taking back. Notice Gascari yesterday, day before, started talking third quarter, started reducing it from 3 to possibly 2. There's some hanky panky going on now. But remember the example I always give you guys: the bike. We're still getting the bike this year. You're not getting it tomorrow for your birthday, but you're still getting it this year. And that's ultimately what Powell said yesterday. So that's what the market's hearing and baking into its price. Now, I'm going to tell you right now, if the market starts getting this much, a little bit of a baby sniff that it's not happening, it's going to get very, very dirty, very, very fast and very nasty. And the bond market is going to come down because when it comes down, interest rates go up or at least stay up. So I think this is temporary. Also, I don't know if you guys are noticing or not, but this is developing into a descending triangle, not an ascending triangle. Here's a descending triangle, and right here, look, descending triangle, and here's another descending triangle right here. Here's a bigger one. Look, let me go on weekly. You'll see what I'm talking about. See that? How it's developing? So there's a really good chance we can just consolidate right here between this bar and this bar, and just build a lower base and continue building lower and lower and develop this extend this further down into a descending triangle. The problem is descending triangles break down, not up. Okay. So again, I'm very, very cautious because folks, listen to me good. Just like a year ago, I said that Japan is going to stop lowering their rates and people were laughing at me. I'm telling you right now, I know this may be a shocker for a lot of you, but the Fed may push back their timeline. Okay, they may push back their timeline. They've already pushed their timeline from March to May. Now it's third quarter. If I start hearing December or November, December, it's not going to be pretty. It's not going to be pretty. Okay, so just FYI, so you know exactly what's going on. Let's talk a little bit about markets. Actually, a lot of fundamental news. Cam, good morning. And by the way, if anybody's joining us live right now, remember Cam has a live session. Cam White, Raleigh's brother, my co-host's brother, he has a live session from 10 a.m. to 1 p.m. And I'm gonna show you guys something. I'm gonna show you guys something. I gotta show you this. Here. Here, I got this email here. Thank you for prompting Cam to contact me. Just today earned $12,900. Since October, 58,000. Kirk. All because of Cam and the Pro Trader dashboard. So it's very, very helpful, and people are getting a lot of value out of it. So check it out. Here's a couple of links for you guys, by the way. Good morning, Carrie. Good morning. Good morning, Robert. There we go. All right, so let's talk about news. Let's talk about news, and let's see how these news can help us or impact or shape things. All right, so we have more Powell speech today. I don't know if you guys I don't know if you guys heard yesterday Congress testimony. Man, they were grilling him. Whoo! I'm serious. I mean, they got to a point where they were getting a little rude, really rude. Like they didn't have to go all that much. So that'll be interesting today. We also have a lot of data for European central banks that does impact U.S. stocks and gives us tailwind or wind in our face. Palantir. Hey, you guys know about this company? Hmm. Interesting company. They were awarded a contract, a $178 million contract, and to develop 10 prototype Titans. And the word on the street is that the stock is actually going to open up 3% higher. I wonder how that's going to help us. Wink, wink. All right. So you guys know what I'm talking about. Foot Locker. Remember yesterday I told you that Nike is breaking down? Well, Nike breaking down is very, very important to Foot Locker because Foot Locker is a retailer pretty much of Nike. I mean, they sell other brands, but they're pretty much a retailer of Nike. So if Foot Locker and Nike is selling off, that's going to be more short stocks for my hit list. And by the way, Nike is my first stock on my short hit list today. But I'm going to add Foot Locker. Tesla couldn't get a break yesterday. Fell. Morgan Stanley cut it. Although it looks like it's at the bottom of my channel. I sent you yesterday an alert letting you guys know that Tesla is at the bottom of the channel, and I think it's going to start moving up. It's been respecting that channel really, really well. ADP report came out yesterday. Private payroll rose by about 140,000, lower than the expected. January job openings edged down. But overall, the numbers were not that bad. They were fine. There was nothing that would sway us one way or the other. But here's where things get interesting. The House panel yesterday said that it was likely be appropriate to begin lowering borrowing costs at some point this year. Okay, fair enough. Fair enough. Thank you, Cam. I appreciate it. But the committee does not expect that it will be appropriate to reduce the Fed target rate until it has gained greater confidence that inflation is moving sustainably towards 2%. So do you guys see how open does that discount December or November? No, it doesn't. We want to see a little bit more. That's exactly what did I say he was going to say? We want to see more data. It's going to happen this year. We don't know exactly when. Sounds to me like he's pushing the can a little further, not too much further. And he's still saying it's going to happen this year. You're still going to get your bike this year. You're still going to get your bike this year. You see what I mean? So as long as he keeps saying that, we're okay. But folks, I'm telling you right now, if the story starts going, oh, we had a little problem with our savings, mom and dad, it's not happening this year. It's going to happen beginning of next year. Oh, yeah. That's going to cause a big, big problem. See what Ben just said? You may get your new bike for next year, next Thanksgiving. That'll be a problem. That'll be a big problem. Good morning, David. That would be a big, big problem. Why? Because this year is baked into this price. And if next year, it's going to be bad. It's not going to be pretty. the bond market is going to drop and it's going to increase pressure on the stock market. And then earnings will have to fix all that. So now look at Kashkari. He stated that he anticipates to reduce interest rates twice or perhaps once. What happened to 3 or 4 times? What happened to 3 or 4 times? Did I miss the memo on that? Morning, Kimberly. How are you? I guess I got to do these a little later. Folks are starting getting used to me going live at 8 o'clock. So I'll start doing these a little later, or I'll start sleeping a little more. We now only have a 3% chance that the Fed is going to lower rates in March. You guys know that's laughable. And there's now a 16% chance that they're going to lower rates in May. It's just not going to happen. Yeah, smaller bike, right? A little baby bike. Beige Book was released. Nothing really major there. Basically, regional business contracted, and also factory orders are down. So, I'm not as bullish as a lot of economists are. I'm kind of neutral right now. As I mentioned, we've got AVGO, we've got Marvell. These are both fairly big chip stocks, and chips have been rocking and rolling. We also have, hey Zoe, how are you? Thanks for sending me that email yesterday. Zoe also made a little money yesterday. We're building up nice little fan club in Roger Scott Club. So Gap is coming out with earnings. That's a retailer. It's a second tier stock. DocuSign, second tier stock. MDB, database stock. But Kroger, Marvell, Costco, and AVGO are not. Keep your eye on consumer staples, Kroger and Costco, and keep your eye on chips. And in addition to AVGO and Marvell, as I mentioned, Micron got upgraded. So there's a lot of things going on. It is a comedy with rates, Adam. You're right. I can't wait to hear what he's going to say today. So again, things are overall not bad. Things are moving in the right direction. As I predicted yesterday, the correction yesterday was not a meaningful move. There's nothing happening. It is just much needed pullback that the market needed. Market breadth did not move all that much. Let's talk a little bit about global economy. Europe is up as they anticipated European Central Bank's interest rate decisions. Folks, before a major report and before a major report in Europe, we may have a subdued market today because we're going into an employment report. And if I was managing money professionally, I would probably trade half size today going into this report. I would still trade, but I would trade half size. Good morning, Eric. I hope you're well. Eric the Viking, right? Love it. So Europe, we got to watch out for Europe. China, they closed lower. We're not getting any tailwind from them. Optimism over better than expected trade data was offset by geopolitical concerns. Pharmaceutical stocks led the decline following the advancement of a bill, a U.S. Senate committee targeting certain Chinese biotech stocks. Keep your eye on biotech stocks today. Japan. Now, I don't know if you guys remember, but look, let me read something to you. Closed lower as the yen rebounded to a 1-month high amid growing expectations that the Bank of Japan will end its negative interest rates as early as this month. That's a prediction from almost a year ago that I gave you guys live when you guys were here in the link with me, and I told you because Warren Buffett started investing in them. There was a huge article in Barron's. It was about as clear could be. The report, the time is right here, Kimberly. Let me give you this. Let me post this for you. It's tomorrow at 8:30, and today we've got a bunch of reports coming out at 8:30, and then he speaks at 10 a.m. And again, I'm not expecting a major. And by the way, folks, join me live today. If you join me at 1 p.m., here are links. I'm going to be giving you my top 5 stocks. Brand new stocks, not some old stocks, like stocks that I'm watching right now. I'll give you a couple in the beginning, and I'll give you a couple at the end of the presentation. Let me see how Palantir is doing. Look at that. Are you guys seeing what I'm seeing? I'm going to make a prediction. There may be an order coming in the pit to liquidate a position in the morning. I'll leave it at that. With profits. I'll leave it at that. Let's now talk about sectors. So we got a little bit of the fragmentation removed, but not enough. What am I seeing in the sectors over the last 5 days? Well, chips and mid caps are still leading. Real estate is still leading. Still, I mean, real estate, basic material, home builders. Okay, that works. That works. Utilities and energy, that works. But the Russell 2000 being right here in the middle of everything, while the mid caps are up here, consumer staples are here next to QQQ, and a sand. Just look how crazy this is. You've got technology and QQQ and consumer staples in between. I mean, if that doesn't tell you everything, what? Think about that for a minute. Technology and QQQ, that makes perfect sense. With consumer staples in between, and then industrial down here and basic materials. Really? Can you make anything in industrial without materials? Hmm. These two usually are next to each other right here. So when you see industrial here, home builders and material here, the Dow here, retail is all the way here, and consumer discretionary. Where's consumer discretionary here? So it's starting to come a little bit. I'm reaching here, but we're starting to get some degree of fragmentation taken away, but it's still really bad. I mean, look, Dow here, consumer staples here, real estate all the way here. What you should be seeing is this: semiconductors, small caps, technology, communication, consumer discretionary, retail. That should be right here. Then you should be seeing consumer staples, utilities, industrial, financial, healthcare, Dow Jones. Do you see the order of that? No, you don't. Why? Because they're still fragmented. I mean, look, when you have semiconductors, which are highly speculative right here, and you have Russell right here, it doesn't make sense. How about technology here and semiconductors? Don't you think you need semiconductors for technology? I mean, at least consumer discretionary and retail are next to each other. That makes some sense. And it's not good that they're all the way down here. And by the way, consumer discretionary is very much related to technology. I don't know if you guys got the memo or not, but is Apple a consumer discretionary or a tech stock? Is Amazon a consumer discretionary or a tech stock? I know you're sitting here going, that's a good question. I know it is. Nobody can answer it, not even Amazon or Apple anymore. 30 years ago was a very easy answer. Not anymore. Things are getting very so the sectors are out of whack. Or how about how about technology being here and communication being here? You know what stocks are in communication? FANG stocks like Google and Meta. Do you think they're doing differently than Nvidia right now? You guys get the point. Moondog is in the house. I love it. So we're still seeing fragmentation. And when you see fragmentation, you see markets doing this. No rhythm, very listless, and very, very, very choppy. Okay. Let me give you guys some levels. So I already told you I'm not expecting the bond market to go much higher unless the Fed changes their tune fast, and makes a commitment. Now, do you know the word commitment and the Fed? Do they sound like they belong together in the same paragraph? Commitment and Fed. That's right, Adam. Without much rhythm. So again, Dave. Good morning, Dave. So again, please be very mindful that unless we get a commitment from the Fed that they say, okay, our first interest rate is going to begin in. I'm making this up, of course, in September. That's when I could see the bond market starting to go up because there's a commitment. Until then, I think we're going to stay in this channel, and that's going to put pressure on the market, especially tech stocks, if they ever get out of this AI rally. I mean, somebody's got to come and say, I had Brian in my office yesterday. Brian's been programming for 40 years. And we were talking about AI. He's like, nothing changed. It's the same thing's been going on for the last 20 years, just marketing. It's just marketing. I mean, those Japanese were making those little AI toys 15 years ago. Nobody was reacting to anything. Eddie, you're in the right place. I think I'm helping a lot of folks make money, Eddie, and just take notes. And I'm about to give you some good stocks. So let's talk SPY here. Let's talk the spider. Let's talk spider, and then we'll talk. Let me change my template here. Go to my demo. So as I mentioned, we bounced off of this 8-day EMA. We're now back above the 8-day EMA. When we go here, remember we Here, let me go 5 days. Yesterday, I told you that we're either going to break this level and come back down here, which we did not, or we're going to break this level. Notice something very interesting. We didn't break this level yesterday. We went up to that level and then we broke down. We never went above this level yesterday. Remember, I told you? I told you about 511 or 50, I said about 509, 511, and then I said 506, this level, right? 507, 506. Well, we're in the middle of this area. We never broke above this area. We need to break above 512 on the SPY. If we don't break 512 on the SPY, we're never going to go and reach that all-time high level. So we're still in the second tier. We need to go one level higher. That level is above 512. So keep an eye of 512. Also keep an eye on the 200-day moving average on the intraday, which happens to be at 508. So 512 to the upside and 508 to the downside. More likely than not, unless the news today is just fantastic, uh, we're going to stay in this range, which is okay, It doesn't bother me. But be careful that we may get some chop. Looking at the QQQ, hey, morning pops, how are you? Look at the Nasdaq. Look at the Nasdaq. Same thing. Here's that breakdown we had from 2 days ago, and we went all the way down here and we closed up here. Look at yesterday. We're still in that range. We're in yesterday's range. We're not outside of yesterday's range. See that? Look, see that we're in that range. We need to go above that range, which would put us right here, which would put us right here. We need to go at like 441. We need to go just a hair higher on the NASDAQ. But if we break down below this level here, if we broke, we need to go above 442, okay, 442, or we need to go below 436. Unless we get there, it's going to be a very muted, consolidated day. What concerns me is this, is we never broke out of the day before yesterday's range. Here, let me clear this up. See that? We gapped down. Remember, we gapped down day before. This is yesterday right here. This is yesterday. Okay? This is without the extended hours. This is with extended hours. This is without. It's easier for me to show you this. So this is the day we made a new high. Then the day before, then yesterday the day before yesterday we broke down right here. This is Monday, Tuesday, Wednesday. So notice yesterday we were inside. We broke up just a hair, but then we bounced hard down. Yesterday's range. This is concerning me because yesterday we couldn't break out of this range from the day before. And if you look on the SPY, you'll see it was the same thing. And when we tried to bounce, look what happened when we tried to bounce. When we tried to go higher, we tried to break out here, we got slapped really hard back into the range. So I want us to break above this range, that 512 area. If we don't break above that area, nothing good is going to happen. Okay. Let me just check the futures and I'll give you the stocks that I'm looking at for today. We'll start with the short side and then we'll go to the long side. Okay. This is the short side. I'm giving you my short side. Nice breakdown here on Nike, UNH. Another breakdown. Remember, I'm just giving you the tickers. We don't want to be here for 2 hours this morning. Oh man, I've been talking about this stock almost every single day from when it was back when it was back. Where's my mouse? When it was back down here, almost every single day I've been giving you this stock. Did anybody take me up on it? Let me know. Fox and Fox A. Look at that. That's nastiness. INST. Whew. When stocks open higher, you want to look at these shorts because they'll open a little higher and give you an opportunity to make money on the way down. I've given you this stock at least 20 times already. It's coming up on my short list almost every single day. Don't say I haven't been. I have. And Med. I love the stock. Love the stock. Let's see if I can get in on it today. That's my short list. I have a short list. Okay. Now let's go long list. DCI. That's a long list. Still like Applied Materials. Commvault, CVLT. Look at that. Nice breakout, consolidation, trying to break out again. WDC, Western Digital. I'll take a look at it in the afternoon, Adam. It just had the news, so I want to see how it is afterwards. I don't want to buy it on the news. Remind me in the afternoon, okay? I'll definitely look at it. It'll probably already be on my list at that point. Western Digital. I love this stock right here. This next one. I have a little star next to it. Love this stock. Another beauty. I'm giving you guys some really good ones today. Progressive Insurance, another leg up. And by the way, I dare you to tell me that I haven't given you 90% of these stocks before. I dare you to tell me. Some railroads, which means CSX is also doing well. This is a local stock here in Jacksonville. Yep, doing fantastic. Railroad stocks are doing well. Euronet. First time this stock is on my list. First time this stock is on my list. AFG. First time the stock is on my list in a while, I believe. Live Nation is starting to come up. If economy expands, Live Nation is going to expand. KB Home. I gave you home builders. I'm pretty bullish on home builders right now, especially if interest rates are going to go down. Nice stock, real nice stock. I'm proud of the stocks I'm giving you guys this morning. I'm looking at these and I'm saying, all of these stocks look really good. Now, they may not be high flyers. They may not be NVIDIA, but these are really, really, really good stocks. Now, folks, listen and listen good. All right. Let me just post this here. Today at noon, I'll be sharing my five top tickers. VIP rooms at 11 today. It's Thursday. While I never promise future returns or against losers, these 5 tickers are going to be the strongest and maybe even the weakest stocks. And I believe they're setting up for a very nice opportunity. I'll also have a game changer to share, a fresh trading approach that delivers over 95% win rate with more than 125 trades in the past 4 months. It's giving regular traders a real shot at success, especially when eyeing my prime pick for the month. So if you're curious about the 5 stocks, the 5 tickers that I'm going to be applying my most cutting edge system that I've ever crafted, follow the link below and join me today at noon, not at 1 p.m., but at noon. And we'll hang out together and it'll be great. Really good picks today, guys. If you want to reach out to me, rogerscott.com. Please reach out to Cam for any customer service or education questions. If you have a trading question relating to a position that we have, please reach out to me. I'm the guy that would probably know that the best. But if it's a customer service or a refund or whatever not, please reach out to customer care. And remember, Cam has a 10 a.m. to 1 p.m. live customer service team to help you share your screen. They'll share there. They'll help you up. I mean, I'm getting emails of people making $12,900 yesterday because Cam was helping them. I mean, really good stuff is happening around here. And I want you guys to share in part of that. I'll see you guys later. Have a fantastic day. Love you all. If there's anything I missed or didn't clarify, feel free to email me. Bye, guys. Have a great Thursday. Stay out of trouble.